Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
20 minutes of trade left and about 1% lost, almost 0.85. Let's be kinder to on the Sensex and the Nifty. The mid caps are outperformers, but they're more likely in flat terrain. And the Nifty Bank is now losing only as much as the Nifty and the Sensex. The advanced declines are, actually 1:1. It's not a very skewed number. Okay, it's time to get the buy today, sell tomorrow calls. Let's go to Mitesh. Mitesh, is there anything that you would buy today for a sell tomorrow or sell today for a buy tomorrow?
Yeah. So, Lata, two stocks. In fact, I have a sell on Kotak Bank. And I would suggest a stop at 1300 and a target of roughly around 1250. And Voltas is a buy with a stop at 565 for targets of 600.
Okay.
Okay, fair enough. And Ashwani, what would you do?
See, the idea is to sell the bigger guys which have rallied. So RIL is a sell with a stop of 1185, target of 1140. HDFC is a sell with a stop of 1950, target of 1900. And maybe Jubilant Food you can buy with a stop of 1400, target of 1465.
Okay, Jubilant Food, we had forgotten about that for some time now. It's back in the reckoning. Prakash, I wanted to speak to you about the auto ancillaries. We have discussed the auto stocks enough, especially after the July sales have disappointed for some of the marquee names like Eicher and Maruti. But what about auto manufacturers? And I mean, I'm intrigued. Motherson Sumi is still not finding support.
Yeah, of course, Motherson has a fair share of woes coming from overseas.
From President Trump. Okay.
And things in Europe, because remember, some of their marquee clients are the ones who are actually struggling with growth, the Audis and the Volkswagens and the BMWs. So that's a story. But within India, I think auto ancillaries are still in a much better footing than the OEMs. So if you had to make a choice, now it's not very well correlated. You would have some of these companies grow much better and then be more resilient, if not just growth. So namely Subros. You look at the way Subros is still holding for. In fact, it's added some more weight. You look at a JTKET, which is the erstwhile Sona steering business. You look at a JBM, so these are businesses which people can't do without. So your sales numbers could probably move a little bit here and there on a month-on-month basis. But some of these guys are absolutely on a sound footing. They've built capacities in the last 2 years, which is now reaping, that's helping them reap the benefits. And the only company in the largest ant space, Lata, is is Bharat Forge, which I think is yet to get its due.
What about Varroc, which is a 10,000 crore revenue, second largest auto bank?
Yeah, so
Endurance.
Endurance, yes.
It's all in the family, by the way, right?
So but distinct businesses. So that way, if you see even smaller businesses like Shivam Autotech, I was surprised to see them talking about a 20% hike in their numbers. I've not seen auto ancillary come up with monthly sales, details the way OEMs do. But yesterday, I noticed that, and some of them which are critical to, so Endurance, for example. Now, Endurance is very well correlated with the growth that a Bajaj Auto would face, right? I mean, so they're enjoying the benefits of that scale. But how much can you make more money on this? Gets at these levels, Varroc or Endurance are well priced. But Bharat Forge, for instance, Prashant, is the one that actually lost a lot of ground last earnings because they had a one-off write-off on the defense expenditure. And there's no operational miss of sorts. So it's not recovered. I mean, it's come back to 630, 640, but it's really not close to, the 670, 680 mark when the earnings came in. So I think there's still much more room. Play safe with the Bharat Forge. Don't be too adventurous these days with small caps.
Okay. Well, some people are saying it's time to buy mid caps, but maybe some mid caps. Do we have Rituparna with us? Look at the flashes that are running on your screen. India may delay the implementation of retaliatory duties on some US goods. In the heat of the moment, I guess, when India was also singled out for higher duties, this retaliatory duties were announced, but now looks like some last-minute confabulations are happening. Rituparna, our head of the Delhi Bureau, is joining us with some details that he has picked up. Rituparna, the delay, is it because there are some last-minute discussions?
Well, there are negotiations going between India and US on trade issues. One team already visited Washington recently. They not only discussed India's demand for exemption on aluminium and steel, but also demanded that GSP benefits that should Indian exporters should keep on continue getting GSP benefits from US. Now, since these discussions are going on, and also we have the 2+2 dialogue which is scheduled in Delhi, India does not want to rock the boat at the moment. Anyways, 45 days period was given when this notification was first issued by CBIC in June, and now the government feels that since the negotiations are going on, more time should be given, because negotiations are on between the two parties, and hence the notification regarding the extension of this implementation date will be delayed by 45 days. The first notification that came in June, on June 21st, had given 4th August as the date on which this duty would have been imposed. But now sources are telling us that most likely there will be a 45-day extension that will be given for implementing these retaliatory duties on U.S. products.
Ritu, thanks very much for that. Rather, we've seen retaliatory tariffs to retaliatory tariffs, right?
Yes.
In the case of China. So I think that is one thing that we don't want. So hopefully negotiated settlement, some sort, is arrived at. As Ritu said, negotiations are underway. Well, 95 points on the Nifty, lower. So
there comes the business volume growth of Marico, and that's not a bad number at all. 12.4 versus expectations of 10 to 12%.
Yeah.
Remember, there was a contraction last time in the volumes. I think, if I remember right, it was -1 or something. The year ago quarter. Oh, -9% year ago quarter. So if you even out the 2 years, then actually it's just flat. Last year's contraction has been made up, that's all. So it's not a mind-blowing number. It's just making up for the loss last time. They contracted. So actually they are where they were in 2017.
But compared to what was expected, this is coming in higher than the upper end of the range of volume growth. So that is good. But the stock is down 4.5% on Marico.
The top line grown 20%. What's interesting is that means they've been able to
price up something. Yeah.
But margins.
So there are a lot of things which kind of contradict themselves.
Yeah. Okay, we take a very quick break here. Almost 100 points lower on the Nifty. There is, very little chance that we will see any meaningful bounce with little time left to close now. The mid-cap index and the small-cap indices have also given up gains, and just 0.15% left on those indices. We take a break. See you on the other side. Okay, 97 points lower on the Nifty, and we are counting down minutes to close. 346 on the Sensex. Bank Nifty is down about 230 odd points or so as well. We have Prashant Prabhakaran of Yes Securities, who's joining in on the show. Prakash Diwan is here with us here in our studios, and our technical experts are with us as well. Prashant, but to come to you, your sense on numbers like Marico, etc., that we've seen come through just now. Dabur, Emami, Marico, numbers are not bad, but market reaction is, in the case of Dabur, because the number was so outstanding, the stock reacted about 6-7% higher. But in the case of Emami and in the case of Marico today, numbers are not bad, but stocks are selling off. Purely valuation-related reactions?
So you have valuation-related reactions, obviously, Prashant, but you have also got to realize that they are already valued at a particular price where, in case you do not meet expectations of the polls that are done, you are going to have corrections which are going to be large. But frankly, we are not disappointed with both Dabur and Marico are in our buy list for quite some time, and it continues to be so because we believe that there is going to be substantial growth in the strategy that they have implemented it in rural India. So they should be there in your portfolio. You have also got to understand that Nifty has seen a 100-point correction. So any negative news in the short term will get accounted for in the same day. If it had been that markets had been up, most probably your stocks wouldn't have fallen at all. You would have had a base effect. So it's the day that it has got released and the Nifty effect that is coming into play.
Okay, you mean on another day, Marico's numbers would have been well regarded? Is that your point?
Yeah, it would have been, I guess. So the day when you're selling and there is pressure in the overall selling, it continues usually.
Yeah,
very
I take
rarely,
your point,
unless the numbers are extraordinary by nature, and it is not extraordinary.
Yeah, maybe they didn't merit a 5% fall, except that stocks have these are the stocks that have been safe haven stocks. And I take your point on the day of announcement of results. BOB and ICICI came at a time when private lenders, corporate lenders were troughing. And by the time, yes, Axis Bank numbers came out, the markets had already had 3 days of rise, and therefore the numbers appeared to have got a thumbs down from the market. Yes, today the markets are elevated compared to what they were. In the last few minutes of trading, 10 minutes of trading, actually the markets are losing a little more steam. Actually 105 down on the Nifty, it's down almost 1%, and the Sensex is down 1%, 0.98% if you want me to be precise, and the Nifty Bank 0.9 down. Mid caps are rushing into flat terrain. Mitesh, is there a carry home trade now, and will that be a short one?
Rather, I think Kotak Bank I would be comfortable. A couple of banking names on the private sector side, I think yes. But broadly, I think 11,200, if it breaks, then I think we'll be more trading on the short side. As of now, we still have more of long positions.
Okay. Ashwani, any advice of to yours to carry home short positions? And will they be the private lenders that you spoke about, Kotak Bank?
Now the issue is everything is selling off, including Maruti Suzuki, Reliance, TCS. So there is an across the board type of selling, as if people are beginning to throw in the towel. You had that 11,260, 270 holding on, but I think carrying home short positions on stocks like Mindtree across sectors, because IT is falling. Why is IT falling? Because trade war, etc., tends to impact exporters more. But overall, very heady rise, all kinds of global situations. I think more correction is coming. So go home with more short positions and long positions.
Ashwini, but wouldn't you agree that the tone and texture of the market has more been about buying the dips, etc., rather than jumping on and trying to get follow through on the downside? Would you agree with that assessment over the last many days?
Then the buy on dip should have worked today. If you are closing at the lows, then the buy on dip is not working. And you have a market which is long up till its nose. So the moment you shake it, it'll all come collapsing down.
Well, yes, I take your point. At the moment, definitely people are full up with positions. And therefore, yes, tough to take. Well, Prakash, anything that you would go long at this juncture at all? Or do you think that you should refrain from buying this dip?
No, so, we were talking about Marico and not specifically on Marico, but the entire consumption theme and the FMCG pack. I think that's been one pocket of discovery, what, let's say, IT did in December, Pharma did in March. FMCG is proving to do that in this June end numbers. It's serious volume growth. It's serious capabilities to pass on prices. As we just discussed, Marico has been able to sell products at a higher price. Though the volume is 12%, you notch up 20% revenue. Dabur's done a spectacular job. I see ITC as one, stock that actually has all the negativity out of the way, especially on the cigarette volumes. And if you see GPI, Godfrey Phillips numbers and the volume growth, it tells you that if the second guy is doing so well, the first guy doesn't have to be worried about. So ITC is one stock that you could be safe in and still ride the consumption theme. And it's, by the way, not even valued as richly as a Marico. So just to give you a context, and it's got paper, it's got hotels, it's got so many other things working in its favor as well. Tobacco is just about 60% now.
Okay.
So, if I were to go long today, in terms of the medium term, it's got to be ITC.
Okay. Well, I just want to tell you that this is the power companies case, which the power companies had dragged RBI to the Allahabad High Court and made a presentation that they should be given a special dispensation, that RBI's circular asking that all stressed companies over 2,000 crore, if not resolved in 6 months, should be dragged to the NCLT. should not be applied in the power company's case because they are where they are because of government policy and not their own fraudulent or bad business activities. The case is adjourned to August 9th. There was high hopes that something will come out of this because the government of India did its best. It has appointed a high-powered committee under the chairmanship of the cabinet secretary, and I believe Abhishek Manu Singhvi, the lawyer for the power companies, IPPI, made this presentation saying that they are doing their best and that RBI should listen. RBI's submission was that you can't make an exception. That would be a dangerous thing to do and maybe even unlawful thing to do. Further submissions from the RBI are awaited, and that is why the court has adjourned the next hearing to August 9, a painful process on over there. We have to take a very, very quick break.
By the way, Lata, I just want to point out, mid-cap index is in the red. We started 230 with almost a 0.5% gain. It's in the red, and the small cap index also now almost in the red.
Yeah, we have to take a break or we will miss the closing bell. Back in a jiffy.
Listen.
Welcome back. We are staring at a fairly red screen as we close for trading today. Mid-cap index just is flat, so that's a spot of green, very, very tiny speck. Sensex is down over 1%, Nifty and Nifty Bank down over 0.9%. How would you look at a stock like Maruti Suzuki, Mitesh? It's fallen with good reason, but at this dip, does it become a buy at all technically?
I don't think so, Lata. I think, what the stock has done is that once it peaked out at levels of 9,900, 9,950 and then came down to about 8,380, bounced back from there. I think it's now developing a slightly broader range, which could be as big as 9,800 to about 8,400 broadly, give and take 50 points here and there. And I think the stock has already started the journey towards the lower end of the range. So I think 85, 8,400 would be an excellent buying zone, but I think that might take about another 2 weeks for the prices to hit those levels.
1% numbers are coming and they are indicating a minor green tick. EBITDA has done well, but profits were only marginally higher. It's not a question of 1%'s performance as much as people doubting the credibility after questions were raised by one shareholder. And therefore, okay, it's the profit is not much to write home about, but the revenues look good. We will have to see how much the company is able to convince investors of the veracity of its numbers. But otherwise, okay, an EBITDA growth of 21% will otherwise have been well received. Yes, okay, at the moment it is up 5%. I also wanted to ask your views on the NBCC stock. Ashwani, you have a view on that? It's bounced back rather smartly from that 65 levels.
See, it used to have great amount of halo. That halo is over. Now, it's still probably reeling in a bear market, but slow recovery, you can say. It can get back to 100, 104, which is the 200-day moving average, but still long time before it gets back to the highs. Not the best stock unless, great amount of infrastructure spending, etc. starts. This has fallen from 145 down to 60 bucks. Now you could, have a 30-40 rupee rally, but its bull market is probably done.
Okay, very quickly on Motherson, is there another haloed stock? Is there a short for the shorter term?
See, basically recent lows were about 280. Now, if this, anything to do with cars, if that comes on the table, obviously Motherson will get hit. But can we break 280? Because at that time also similar stories were there. So your downside is hardly 20-25 rupees. So it's very difficult to play based on this, because right now it's US China. Once US Europe starts, probably Motherson will get into bigger trouble.
Okay. There goes the bell, and the markets ended in a spot of trouble for the bulls. You will have to say 1% gone on the Sensex. I can't remember when last the Sensex lost so much. 106 down on the Nifty and 250 down on the Nifty Bank. 27,350 has been broken for that index, down 0.9%. Quickly run through the big boys who took the market down. Kotak Mahindra Bank, and I think Ashwani was calling a sell on that stock, a short on that stock for some time. since morning. So Kotak is 2.6 down. Bharti Airtel, okay, is even worse, 3% down. Grasim, Maruti Suzuki. Maruti is another big reason why the markets ended so much lower, as is Reliance, down about 2%. The Reliance stock, that heavyweight. HDFC, another heavyweight, dragging down 1.9. Vedanta down 1.9. Tata Motors 1.8. Tech Mahindra, HCL Tech, and well, let me see, TCS, all of them down about 1.5. Even the mighty Bajaj Finance is ending in the red, and almost 1% in the red, as is Bajaj Finserv. Well, I think it's easier to read the green list. It's the drug stocks. Lupin, DRL, Sun Pharma are among the top gainers, and next you go to the usually safe stocks which behave like fixed deposits. The power grids of the world, that one is up about 2%. And IndusInd has been spared the blushes, 1% higher. And then there's HUL and Titan and Indiabulls Housing, which have ended mildly in the green.
Lada, mid-caps, right? I mean, so I'm going to keep the list fairly short. So let's look at stocks which sold off, right? I mean, by the way, the mid-cap index fought valiantly, but I think ended absolutely flat off the highs. So under pressure, Motherson, we were just discussing that. Ashwani was talking about that. Marico results reaction. There was a cut which came through. DLF, I mean, it had fought back to about the 200 kind of levels. With this recent rally, it lost today. We had Radico, which sold off. And then you had something like Philips Carbon. I'm only listing a few names with large volumes. So Philips Carbon was also down by about 3% on large volumes. Okay, gainers across the board, broader markets, ABFRL, again, large volumes. And almost 12-13% higher. We were talking about Indigo, but there was Jet Airways, which was up 6% by close. You look at Indigo, which was up about, what, 4 or 5%. I think everything came off a little bit by close as the market was under pressure. Steel Authority of India, higher. Look at Manappuram, which looked okay, looked good. Venky's was up 20%. Dilip Bilcon, it's basically from 600 back to 900, back to 600, back to 900. And all this has happened in the last, what, 20 days, 25 days or so. So at 850, not quite 900, but, well, a big move today. NBCC, higher, about 5%. Lemon Tree, big gains, big volumes. JM Financial and something like a Balkrishna Industries were the other gainers. So, I mean, a list of broader market losers and gainers. Lada.
Yeah, I think the finance companies also are doing badly, except for the odd maybe Indiabulls Housing, whose results are due, and some others like Manappuram. But otherwise, a tightening cash atmosphere. The point that Ashwani is pointing out again and again, whether it's globally or in India, cash is going to get tight, and that is also affecting the market. Any tomorrow trade on the Nifty or any of the indices, Ashwani, what would it be?
See, today's significant thing is that we opened gap down. At no point Bank Nifty covered that gap. The Nifty kind of covered it, but what's important is we were not able to take out yesterday's lows. So now the market is clearly in a short-term downtrend. You can call it a correction. I won't rule out 11,050, 11,070 because Bank Nifty exactly has come off from previous highs, which were about 27,600 thereabouts. So it looks like the market is in for a serious correction. So 27,100 on Bank Nifty, maybe 11,050, 11,100 on the Nifty. These are the 20-day moving averages, and given the kind of environment we have, it's very easy for the market to correct back to the 20-day moving average.
Fair enough. Gentlemen, thank you very much for joining in. Ashwani, Mitesh, Prashant, Prakash, all of you, thanks for being with us here on the show. We take a very quick break. See you on the other side.
Welcome back. Well, Manisha Natarajan caught up with Anup Kumar Mittal, the CMD of NBCC, and began by asking him about the company's initiative to take up projects that are stuck and if the management has looked at it and thought in terms of the requirements as well as the funds needed from the government, monetizing land parcels, etc. Listen into that slice of a conversation.
Government of UP has constituted a committee under the chairmanship of Secretary Urban Development. I am also one of the members. Some of the developers' projects have been offered to us. We have started doing the due diligence of those projects.
Okay.
It's not a one-day job because number of projects are there. There are thousands of thousands buyers. We are making the statement, yes, we are willing to take up these projects. But definitely, first, this should be viable commercially. Second, this should be doable project. Means there should be sufficient FSI available, sufficient money should be available. All the agencies should cooperate, whether Noida Authority, Greater Noida Authority, or banks, or lending agencies. So all these subjects are very large subjects. So it's not a one-day job.
Is there a sense within the government that if there is a bridge fund requirement, they will support you?
You see, government is very serious about this subject. They feel that these 3 lakhs buyers should get their houses in Noida, Greater Noida, or Yamuna Expressway. That's why government has constituted this committee. And this issue was discussed that this bridge of funding, how this can be made up. Either these banks should finance these projects. Later on, they can claim FSI or whatever revenue generation will be there. They will share that. So there are a number of ways, but government is very serious about this.
Okay.
So I think, as I said, within 15 days, we'll submit our initial report to government.
But there are also a lot of developers who are stuck, unable to complete the projects. They're approaching, let's say, a Godrej for JV. They're approaching other people for JV. You came out with a big ad very recently in one of the leading newspapers saying that we are open, come approach us if you want to do some joint development. What was the purpose behind it? Was it similar sort of projects? Private developers who would need your kind of capabilities in construction to come and join hands, or is it a larger mandate?
You see, almost similar kind of thing. Since we are in real estate, we are in development of properties. So this issue came to our board that why NBCC should not start this kind of business also. When you are willing to take up half completed projects of other developers, why we should not start from beginning from the greenfield project? So that's why this.
Where there are landowners, but they don't know, they don't have capabilities.
Money, they don't have capability, management or technical know-how. So we will work as project management consultancy company, like other, some of the names you have taken.
Okay.
But since you have seen this, so that will be similar kind of model.
Okay. Then my question is that you already have an order book which is huge, 80,000 crore to 1 lakh crore. That's the figure which is ranging. But the execution pace has fallen, and the markets have also similarly reacted by the stock getting re-rated. You've said that the pace will pick up, but are you confident that you're not taking on more than you can chew?
No, it's not like this. For example, this is 7 colonies. They themselves, almost 30,000 crore rupees order is coming from these colonies for NBCC. So these projects now, for time being, stuck. But I hope that they will start. So this is not an issue that pace of the construction. I think we can make up this.
Moving on then, as SBI General prepares for its much-awaited IPO, there is an impending transaction likely to get executed before that. Bhushan Mahapatra, the MD and CEO of the company, spoke to CNBC TV18 about all that and also threw some light on Supreme Court's order on mandatory long-term motor third-party insurance and its implications.
All new vehicles have to come with a 3-year third-party cover for motor cars, four-wheelers, and a 5-year cover for two-wheelers.
Okay, and is this both for motor third-party as well as a comprehensive policy, or is this only for?
Order is very clear. It is for motor third-party.
Would this lead to a jump as far as the premium from motor segment is concerned? And if
yes, it is too early to assess that.
Because
position.
I am going by the thinking that otherwise there would be a lapse in terms of renewal a lot of times with a lot of policies, which there's no scope for now if you give them a 5-year or a 3-year policy. In that sense,
but
that lapse would...
But the pricing of that becomes more complicated.
Do you think that the pricing would increase from the current?
It's too early to say anything, because at the council level, we are discussing on this as to what is going to be the product that we will have to bring in in future. But the fact is, on 1st of September, we have to ensure that we have the 3-year TP. 3-year and 5-year TP portion.
The Australia Insurance Group is looking to hike its stake from the current 26%. What are the discussions which you've had with the foreign partner? And to my understanding, it's going to be a shareholder-driven transaction from State Bank of India to the foreign partner. How does this flow? How soon can we expect an announcement on this?
See, this is the dial-up option is there as per the joint venture agreement.
Absolutely.
IG had given their intention to dial up, and the two shareholders have to take it forward.
Right.
That's our this thing.
If they intend to dial up, which you say that they have expressed the intention, from the current 26%, to what point have they expressed the intention?
I think
is it 35? Is it 49?
See, it's a shareholder-driven transaction.
Yeah, but what are the initial conversations?
Really, see, we as a company do not have exposure to that.
And is it going to be from State Bank of India side, which means that if they dial up, would the funds go to the bank?
See, that's a question better answered by the shareholders, because that transaction doesn't come to the company. It's a settlement between the two counterparties.
You're 1 quarter closer to the much awaited SBI General IPO.
I think that's means fairly clear timelines have already been announced by the parent.
Exactly. This time it gets more exciting because you had expressed the intention that first we would wait to come in the underwriting profit zone, which you've come early as far as the timeline
No, but
is
I think that timeline still stays.
Which is FY20?
Yeah.
So would it be the first half of FY20 or would it be the second half?
Let's work that out. That's time for that.
Okay. But have you started essentially talking to merchant bankers, understanding the valuation picture? What's the preparation?
There's a means in any IPO, if you want to do a decent job of it, it takes about 15 to 18 months to...
Exactly.
So we are on that track.
Also, if you could help us understand and give us a glimpse as far as the kind of valuation which SBI General would expect from the market.
See, internal valuations are something which will happen at the point in time.
What's the current book value that you have at this point of time?
See, you know my book. You give the multiples that you think is right. Say about 1,600 crores.
1,600 crores. So the market valuation would be somewhere around 3.5 times or in excess of that.
Why? Why 3.5 times?
So,
no, you look at the multiples at which Lombard trades.
Okay, cognizant number flashing for you on the screen. The revenue came in at $4.01 billion, and the guidance for the year as well, the quarter two as well, has come in at the upper end of what the range was. Kritika is here to analyze those numbers for you. Kritika, what do you?
So, Nisha, no major fireworks. This is in expected lines, but you know, we were expecting some pressure from healthcare and some specific pressure from retail, which hasn't come in this time. So they have actually come in at the higher end of the guidance. So revenue has risen to $4.01 billion. So that's up by about 9.2% on a year-on-year basis. Margins have actually come in strong at 16.7%. So that's on a consolidated basis, 16.7%, in line with what we were expecting. Typically, this quarter is seasonally weak for margins. So that is the reason why perhaps we could have seen some amount of impact there. But overall, if you look at the kind of guidance they have given, they have maintained their guidance. And this time around, we were expecting a revision. So maybe some analysts may have taken a little bit of an issue with that. But yes, what they have said is that Q through 2018 revenue is expected to be in the range of $4.06 billion to $4.10 billion. The third quarter 2018 non-GAAP diluted EPS is expected to be at least $1.13, and the full year 2018 revenue is expected to be at $16.05 billion to $16.30 billion. So they've maintained the guidance that they had pointed out last quarter. What they have also said is they have this time around given a breakup of the kind of growth that they have seen on a year-on-year basis. So I'll have to go deeper into the numbers to get a quarter-on-quarter figure. But healthcare is up 10.1% from a year ago. Financial services 4.5% on an annual basis. But This is unexpected line because the first couple of quarters were slightly difficult for financial services. Communication, media, technology up 15.8%, products and resources up 12.4%. Some important comments as well coming in from the management. Francisco D'Souza has said that as our second quarter results confirm, we're making solid progress on a plan to accelerate our shift to digital services and solution. We have been methodological in developing, aligning and applying a portfolio of skills, services and solution to clients' needs so they can become fully digital organization. Very interestingly, Karen McLeod, who's the CFO of the company, has said that year on year, the GAAP operating margin expansion reflects strong operational execution and positions us well to absorb the planned investments in the second half of the year, and they maintain their margin guidance of about 20% in the long term. So net, no fireworks, unexpected line, but what can be positive is the fact that there aren't any hiccups or sector-specific hiccups that have come in from healthcare and financial services. They have the annual con call happening in the evening, so we will get the exact breakup of the figures then. But yes, prima facie, decent set of numbers, no fireworks, yes, but meets our expectations broadly.
Okay, so no disappointment coming from Cognizant this time. Let's see what the read-through for the Indian IT companies are and how they react tomorrow. But on that note, let's slip into a quick break. Actually, let's do one thing. Let's take up a CNBC TV18 exclusive, because my colleague Anshu Sharma caught up with Naveen Jindal, chairman of JSPL, and began by asking him about a whole host of issues ranging from their debt reduction plans to the company's plan on the Oman listing as well. Hear him out.
Firstly, I must say that we are really happy. It's like a dream come true, a dream which I had seen like in 96, 97. So more than 20 years ago, there was a dream that we want to make the best quality rails in India. We want to make the world's longest rails, make it 121 meter long, single piece, join up to 4 pieces together, make it 480 meter long and supply it to Indian Railways. And just imagine, we've been ready since 2003, and finally 15 years later this dream comes true, that we get an opportunity to supply rails to Indian Railways. And I must thank Government of India, Steel Ministry, Railways Ministry for encouraging the Indian steel producers to get this opportunity.
There was no price discovery as such, because you were the only qualified bidder in the financial bid for this tender. So what was the pricing? How did you manage this? And how will it be competitive?
So I'm sure, I'm confident that even if they opened all the tenders, we would have been the lowest. Okay, because if we've been waiting 15 years for this, we are not going to be outbid in price, right? So, and Indian Railways has been buying rail every year. So we have quoted much less than what they are already buying rails at from Steel Authority. So, and in terms of price discovery, Indian Railways, obviously they do their due diligence, they have researched the market very well, they know what the prices are. So I think they have got a really good deal.
Coming to the steel business now, so what is your price outlook for this year?
Well, I think prices internationally are quite stable. So here also, in the monsoons, obviously the construction activities do slow down. And that has an impact on construction steel. But other steels, it does not matter. So generally monsoon, like say up to August end, is a lean period. But then from September again, it starts picking up. And then the second half, that means October to March, are the best seasons for steel industry. So in the second half, most steel companies do like 60% of the turnover in the second half. And we are going to be absolutely ready. All our plants are going to be stabilized. Angul is now fully stabilized. We are adding a third caster in the first week of this month, August. And so we are going to be fully ready. And we are going to, in September, we are going to start our coal gasification plant also. So we are really looking forward to ramping up our production.
Okay, let's take a short breather on the show. When we come back, Manisha Gupta will join in with all the action from the currency and commodity space.
Welcome back. And as far as the commodities go, well, it has been a day which has been quite volatile. We are digesting on the Fed meeting announcement yesterday, and the markets also woke up to China saying that if US actually does put a 25% tariff on $200 billion worth of goods, then China will also respond, retaliate in some way. So the global market's clearly looking at these two important factors, and that's the impact that we have seen in commodity prices. T. Gnanasekar, director at Comtrends, now joins us with his sense and, of course, the impact of the global cues. Gnanasekar, hi, starting with the metal space first. And the August has begun on a much weaker note. Of course, we've seen some pockets of bargain buying on the lower side for some of these metals. What is your sense? What are you reading? What are the charts telling you?
Well, I think the rising trade tensions is certainly outweighing, any kind of positive sentiment that's coming on the back of positive fundamentals. There's a prospect of a strike in the largest copper mine, and you still have market in a bearish mode. But having said that, I think the charts are more or less indicating that we're close to a bottom, but it's difficult to put an exact number as to whether we're already there or not. But my sense is, getting bearish at this level would be a little hazy at this point in time. So I'm quite cautiously bearish from here. In fact, looking for buying opportunities if we see further dips from here, specifically in copper, nickel, and zinc.
So, this is a question I've been asking for the last couple of days on everybody who's been coming on air. So, when you do believe that we are closer to the bottom here, what is the risk on the lower side and what is an upside from here?
Well, I think the downside risk seems to be limited. When I say limited, I think we are talking about anything between 3 to 5% from here. But the upside momentum could be as high as 10 to 15% or even 20%.
All right. So precious metals, and do you share a similar kind of an enthusiasm there, or do you think this is a sector which actually could see further declines from here?
Unfortunately, it's not really playing out with the dollar at all. Typically when the dollar strengthens, gold prices go down, and when the dollar weakens, the vice versa happens. But we've been noticing that every time the dollar weakens, I think gold is just inching up a little bit. But then when the dollar strengthens, it's ready to quickly fall as much, which typically says that the market is heavily long dollar. I think gold has lost its safe haven status at this point in time. And people are more so seeking the dollar as a safe haven compared to gold. But having said that, there are positive sentiments and factors which could kind of impact and affect it positively going forward. And my own feeling is once the charts are showing that it's somewhere close to a bottom, which I think anywhere between 1195 and 1200. So at those levels, I think it's good for a long-term buying also, as well as short-term. So, that's a level I'll be looking out for in the international markets.
Okay. And crude oil prices, and that, of course, fell 2% in the New York session. Asia and Europe today, of course, have been slightly stable. We even saw some buying come in. What is your sense here? Because the supplies clearly seem to be increasing. The global queue is not very supportive. Do you think this is yet another space which could be under pressure?
Absolutely. I think crude has been under pressure for a while now. But we've seen some volatile moves. And after the volatility, we are seeing the kind of decline which has begun. And it's expected to head towards $63, $64 on the downside. So it's a clear sell on any upticks from here, at least in the near term. And with these trade tensions and and a stronger dollar, is certainly going to further pressure crude prices lower. But having said that, in the bigger picture, I think it still shows a lot of tendency to keep rising, and critical supports around 63, 64 will hold, and then prices to go up from there. The near term, we're bearish.
Okay, so that's nearly $3 down from where the NYMEX crude is trading right now. And we have seen a turnaround come in for the crude oil prices. So just about 67 holding now for NYMEX, with nearly a percentage point of a loss coming in. Gnanasekar, thank you so much for joining us, for giving us your strategies. With that, it's a wrap up on this edition of Closing Bell. Thank you for watching.